Hey everyone, welcome back. Hope everyone is having a great Wednesday. The markets weren't so great today. They were a little bit mixed today. S&P and Dow was down. NASDAQ was actually up. Bitcoin and Ethereum were both down. Miners were down for the most part. We'll take a look what's going on there. We also have Terawulf. I think investors are being a little short-sighted. We'll go over why I think that might be the reason, and we'll just get into it. Then we also have stablecoins. Are they in SEC's crosshairs? It looks like they might be. We'll get into a story on that one as well and what that could mean for everybody. And we'll call it a day. This should be pretty easy. So as always, not financial advice for entertainment only. Do your own research. Don't fall for scams. And I'm investing in finding coins and companies for full disclosure. So let's get into the markets here really quick. So S&P was down today at 0.16% down to 3,991. Dow Jones was down 0.26% to 33,045. NASDAQ was up just slightly 0.05% to 12,066. Bitcoin was down today. If we look at it right here, it was down 1.1%. It was down a lot more than that. It was down almost 3% at one point during the day, and it bounced. So here's what we got going on with it. We were up 1, 2, 3, 4, 5, 6 days. We did try going above our 200 weekly moving average. That did not pan out. Like I said in previous videos, that the more times we try and we don't go above it, the likelihood that is going to happen is we're going to fall down, which we did. And I said we're going to test this line here at 38,000, or not 38,000, 23,800, I believe. It's kind of hard to see. Why am I seeing percentages on here? I don't want to see percentages. There we go. 23,800. And we went down below it today. If we look at the 4-hour chart, you can see it here. We went below it, tested it, and then finally got back above it. So I think that is a good sign right there, at least for the short term. Where we were going to end up at, I really don't know. We'll see if this support line gets tested a couple more times. If it does get tested, we are more than likely going to be heading down lower potentially. Our next support line is at the 21,360 mark, somewhere around here. We may also test this 20-day moving average, followed by the 50-day moving average. And then we'll see if we test the 200 weekly moving average or 200 daily moving average as well. We'll keep an eye on it. On that one, take a look at Ethereum as well. Ethereum was down today as well. It went actually below the 20-day moving average here a little bit. It was down 1.01% and it closed at 1,642. So we'll keep an eye on that one as well, see where that one ends up at. It has the 20-day moving average that it kind of battled a little bit here. We'll then have the 50-day moving average and then the 200-day moving average as well, kind of battle with that one. So it might be interesting next 2 days for both Bitcoin and Ethereum. Let's take a look at the miners here really quick. The miners, Annie was down. Let me take out these here. Make it a little bit easier on the charts. So here's the daily chart for Annie. Annie was up today 2.74% to 43 cents. Argo was down 8.94% to $1.63. BitDigital was down 2.84% to $1.37. Bitfarms was down 4.72% to $1.01. It's kind of nice to see that it's still up above $1 here. We've been above $1 now for 1, 2, 3, 4, 5 trading days. We'll see if we can keep that up for another 5 days, and then that way they'll get their NASDAQ listing obligations met. And you got Cypher was down 0.57% today to $1.73. CleanSpark was down 4.81% to $2.97. Cores was down 2.78 to 35 cents. And then you got DigiHost was down 13.02% to $1.47. DMG was down 7.74% to 23 cents. Greenidge was down 1.73% to 54 cents. Hive was down 4.59% to $2.91. Hut 8 was down 1.1% to $1.80. Iris Energy was down 1.81% to $3.25. Marathon was up slightly 0.84% to $7.19. Mawson was down 3.6% to $2.68. Riot was up 2.09% to $6.35. Soluna was down 1.85% to 33 cents. And then Wolf was up today 2.48% to 68 cents, almost 69 cents. And I believe they're supposed to report their quarterly results, but I haven't seen the numbers come out yet. Maybe they'll do that tomorrow. Looks like that might be, when are they saying that's going to come out here? Showing up here as today, but we'll see if it maybe gets released tomorrow. Okay, so we'll take a look at that when that does come out, but we'll obviously talk about them here a little bit today. And looking at the network hash rate, it is now on the 7-day average, 316. On the daily average, if we look at it, it has come back up here to 325 million as well. We'll see where that one goes going forward. So our first story here is on the SEC has a stable firm in its sights, and it could shake up the whole 137 billion market cap. Stable coins are typically used for, you put in your USD dollars, right, from your bank account or checking account, whatever it might be, and you put it on the exchange that you're going to be trading on. Then you buy whatever coin you want to buy, Bitcoin, Ethereum, whatever it might be, Cardano, Solana, whatever. If you're going to be trading it, then you sell it, then you usually sell it to like a stable coin, something like a USDC. And the other one that they're talking about here is BUSD. There's also Tether as well. And the reason you do that is, for one, you don't have to wait until it clears through, well, if you go to regular US dollar, it has to clear basically the transaction, and it takes time. And with stablecoins, you're able to do it relatively quickly because there's no clearing on it. It just goes into the stablecoin and then you can trade again within a matter of seconds. You can trade again to something else. So that makes it a lot more applicable to traders that trade a lot. I don't trade a lot, so I don't really use these, so it doesn't really affect me that much, but it could affect a lot of people out here in the space. So let's get into the story. The U.S. Securities and Exchange Commission could be gearing up to take action against Paxos, a company that issues a type of cryptocurrency called stablecoin. They are the ones that issue the USD stablecoin. Stablecoins are a type of cryptocurrency designed to mirror real-world assets such as the US dollar. They're usually one-to-one to the US dollar. These stablecoins are often backed by real assets such as bonds or cash in reserve. They have become the backbone of the crypto market as they allow people to trade in and out of different coins quickly without having to convert in and out of fiat currency, right? So that's the main appeal to them, is that you can do this relatively quickly. If you've ever traded on a regular exchange, whether it's stocks or anything like that, sell a stock, you got to wait. Typically, if you don't have a lot of cash on reserve or other stocks that you're invested in, they typically don't give you the chance to invest right away with that profits. You got to wait a couple of days for it to clear, and then you can trade again with it. So this kind of is a lot faster way of being able to trade on cryptocurrencies. So Paxos issued a digital currency called Binance USD or BUSD. It is a stablecoin associated with Binance, one of the world's biggest cryptocurrency exchanges. BUSD is pegged one-to-one with the US dollar. Right. So last week, New York State's financial regulator ordered Paxos to stop issuing BUSD. Right. So you got somebody going after him already in New York. And then separately, Paxos said that the SEC had issued a notice that the regulator is considering recommending an action alleging that BUSD is a security. We'll get into what is a security, what isn't a security based on the Howey test. But Paxos said that notice suggests Paxos should have registered the offering of BUSD under federal securities laws, and obviously they're probably going to end up fighting this. But the agency's actions are being watched closely because if it starts an official procedure, it could have huge implications for all stablecoins, including Tether, which I talked about, and USDC, the two largest, which combined are worth $110 billion. Are stablecoin securities. The SEC uses a Howey test to determine determines what is deemed a security or an investment contract. There are 4 criteria to determining whether something is an investment contract or as part of a Howey test. For example, if there is an expectation of profit from the investor. So let's take a look at what the Howey test is. So the Howey test is defined as the following. Under the Howey test, a transaction qualifies as a security if it involves the following 4 elements. Number 1, it's an investment of money. Okay. Number 2, in a common enterprise. Okay. Number 3, a reasonable expectation of profit. That's a big one there. And number 4, derived from the efforts of others. So stable coins, I think, could possibly fall into 3 of these. An investment of money. So you are investing, you're putting your money into something, that stable coin. In a common enterprise, so it is backed by something, some kind of common enterprise, and derived from the efforts of others. Okay, that could be somebody set this up, somebody, is backing it $1 with the stablecoin. Number 3, however, I don't think it applies to this. So a reasonable expectation of profit. When you sell out of your coins, get into like a USDC or a Tether or BUSD, once you're in that stable coin, there is really no expectation of profit on that trade or on that coin. That coin is just pegged $1. You're really just going to be holding it there for a little bit of time until you invest in something else. You're not expecting to make a percentage, an annual percentage rate or something like that for holding like you would in maybe a savings account. You would have some percentage that you would get over a year, which is still really, really small. But nonetheless, you don't have the reasonable expectation of profits when you are in a stable coin. At least I don't. I don't know if anybody else does. I don't even think there's any way to get profits on it unless you're able to buy, if it falls, if it depegs from the dollar to dollar ratio, if it falls below it, then you might actually make money on it. But there's really no expectation of profit otherwise. So to be considered a security, its transaction must meet all 4 prongs of the Howey test. And that's why I think number 3 doesn't really apply to this, especially for stable coins. Now, we'll see where the SEC comes down on this. But it's going to be interesting. If BUSD is deemed a security by the SEC, then the regulator would have oversight over the stablecoin and other stablecoins as well. Whatever company issues BUSD would need to register with the SEC and accept more stringent regulations. More stringent regulations would be fine. Sometimes we don't really know on these stablecoins how they are pegged to the dollar. We'll have to keep an eye on that one. SEC reaches a settlement. So here's what are the likely outcomes. Here's a quote from somebody. So SEC could possibly reach a settlement with Paxos in which Paxos concedes that BUSD is a security, leading other stablecoins to follow suit and register. They could also go into possibly litigation. Litigation would take years and the risk of losing to the SEC would be significant. The mere fact that Paxos would be fighting against the SEC would create risk and potentially make BUSD less attractive to the marketplace, which could also be the case there. And another outcome, according to Moriarty, is that the SEC may regulate what assets are used to back stablecoins and the requirements for issues of the digital currency to make disclosures to the market. So this would actually make more sense here. So when they do a pegging 1-to-1, they're usually having as bonds or actual US dollars. They may have some other things in there as well that basically tie that coin to be pegged to 1-to-1 dollar. The SEC could say whatever assets you have that are backing the 1-to-1, you would have to disclose those, what those are, where those are, possibly things like that. And I would actually be fine with that. I think that would be actually a great idea to get a little bit more openness as far as what's backing those stable coins. There's been a lot of concern with Tether, I would say, as far as are they actually pegged 1-to-1? There's been some accounting done on it, but it's still not 100% accurate, I guess. So there's still some concern out there. So if they could do this, I think it would be a good thing, okay? Let's see here. Are Tether and USD in the crosshairs? Well, we still don't know the exact basis on which the SEC is alleging the violations, so we don't know the extent to which those allegations will extend to the other industry participants. This is Lansing said, and Carol Alexander, professor of finance at Sussex University, said the U.S. regulators' action is more of a move against Binance than stablecoins, which, okay, that could possibly be the case as well. Alexander said Binance is causing increasing concern for regulators around the world in areas from money laundering to violating securities laws. That could be one reason the SEC has targeted BUSD. She said it could be also the case for it. We just don't know. And then a Binance spokesperson said that at the time, the firm has zero tolerance policy for insider trading and a strict ethical code to prevent any misconduct, according to Bloomberg. So it's one of those things where it's going to take time to play itself out. We'll see whether SEC is going to pursue this going further with it, and if they do, as far as what the charges are actually with it. The charges are going to be for the stablecoins to be regulated based on the backing, what's backing those stablecoins. Okay, I'm fine with it, but I don't think they can win the test. I could be wrong on this. I'm not a legal expert on securities, but it doesn't pass the smell test with presumption of profit with these stablecoins, okay? Let me know what you guys think about this down in the comments below, and we'll see what happens with it, okay? But this could be kind of challenging going forward, especially as a lot of exchanges do use stablecoins for trading and for moving between exchanges as well. Okay, so that's it. That was on the SEC. Next, let's talk about Terawulf. So Terawulf has been beaten down quite a bit here for a while now, since beginning of February, since the beginning of this month. And there's a reason why, but I also think that it's kind of overblown a little bit. So if we look at, no, not that one, this one over here, there it is. If we look at Terawulf right now, and if we compare them to a couple other companies like Cypher, Bitfarms here, and we look at the percentage, we can see since the beginning, let's go back to the beginning of the year here. Let's see here, 27th, 20th, 28th, 29th, right about there where everything pretty much bottomed out. You can see here that Cypher is up 319% from the beginning of the year. Bitfarms is up 152%, and Terwulf is actually just up barely 1.61%. You can also add in here, let's add in here Hive, see how they also stack up into this. And you can see Hive is up 103%. So, and pretty much all the other companies have done better than Wolf has. You could see here that they did have a nice little increases along with the other miners all the way through basically the 1st of February. Then the news came out on February 2nd that they are going to be raising capital through share dilution. But there's also a lot of good news in that as well. So I thought we were just going to go through this. And I think that Terwulf is getting beaten down, possibly rightfully so, but also for possibly too long here. We know whenever there's shareholder dilution, investors basically have a hissy fit and sell shares, and we get what we saw here where it basically dropped on that one day from the high here all the way to the low. Let's see here, where's the low here? Right there, it basically dropped 35% in that one single day when that news came out. Okay, so let's take a look at the story that's here. So Terwulf announces beneficial debt modification, approximately 32 million of new debt equity proceeds. And there's some good in here, and there's also some bad. So there's more good, I think, than there is bad. And I think we talked about this slightly when it did happen, but we didn't go into details that great, so we'll just cover it here. So beneficial debt restructure on January 27th, the company entered into a binding term sheet with existing lenders that will, among other things, replace amortization of the term loan with a free cash flow sweep mechanism through April 2024. So basically another year, 14 months, subject to the company raising the requisite amount of equity proceeds by March 15th. And then we also have a public equity offering. So this part I think is really good here. This gives them time to get their operations up and running in order and everything else, and gives them some time to, especially with Bitcoin possibly going up, to have a little bit more healthier of a balance sheet. Public equity offering, the company announced the pricing of an underwritten follow-on offering of common stock for gross proceeds of 25 million before deducting underwriter discounts and commissions and offering expenses. The offering is expected to close on or about February 6th, 2023, subject to the satisfaction of customary closing conditions. So 25 million was going to be a pretty big hit as far as shares. It was going to be, at that time, they were $1 roughly, so that would have been close to 25 million shares. And here, so this is another good part here. So this was a bad part that investors, I think, just kind of had a little hissy fit and started, well, sold the shares off relatively quickly here. Here's the good part though. Management investment. The company also announced that its co-founders, Paul Prager, and Chief Executive Officer, and Nazar Khan, Chief Operating Officer, purchased $2.5 million in a private placement at market price of $1.05, and this was on January 26th, it looks like. Top management has skin in the game. They've invested a lot of money into this as well, and they've also invested here previously. The management investment is in addition to the more than $15 million of personal capital previously invested in the company by management. They obviously have a lot of skin in the game. They believe in this, and they believe this is going to work out for them. Otherwise, they would not, put in another $2.5 million into something that they don't think is going to be beneficial to them in the long run. I think this is being overlooked a little bit too much. I think this is usually a bullish sign for investors. When management does buy shares at the market, it usually is a good sign there. The company intends to use the net proceeds, equity proceeds, to complete build out of the Lake Mariner and Nautilus facilities and for general corporate purposes, which may include working capital. The net equity proceeds, together with the expected proceeds from the exercise of the underwriting's options to purchase additional shares, are expected to fulfill requirements of the beneficial debt restructuring. And then additionally, in order to facilitate the offering, management exchanged 12 million shares of common stock for warrants that will be immediately exercised upon stockholder approval for the increase in the company's authorized common stock. So this is another one that I think also kind of didn't go well with the investors. I'm not getting into the management commentary here, but they are pretty pleased with this and they think that this is going to work out for them. So if we look actually at their numbers here, we can see the Terwulf has about 176 million shares outstanding as of yesterday. I think this was the price yesterday, 67 cents. Market cap is 118 million. Not too bad still. But you can see here that they have been growing ever since pretty much October. They were at 119 BTC, 134. December was a down month, 125. We had the winter storm that come through, and then January is 157. So they have been increasing their numbers here. Their revenue is also increasing here as well, that we can see here. They reported September was 3.8 million. For December, ending quarter, I have them at 6.8 million. That's almost double what they were. March, if things stay where they are right now, and they don't install anything else, they're looking at to be about 9 million currently. They are definitely growing in the right direction, I think. Now, the concern here is the debt that they do have on their books here. And if we look at also their hash rate has been growing quite nicely here at 1.2 exahash in October, 1.3 in November, 1.4 in December. January stayed the same. They're waiting for some of their sites to come online. But let's take a look at their debt here. So this is from Q3. This would have been on, I believe this is for quarter ending in September. If we look at their debts, their assets. So their assets have been coming down each quarter to 16 million here at the end. Total assets, 309 million, went down a little bit, but also their total current liabilities is a lot. It has been increasing from 52 million to 97 million, 205 million. And then the total liabilities as well has been increasing a little bit here. Well, a little bit, had a huge increase from Q1 to Q2, and then a small increase from Q2 to Q3, 188 million compared to 184 million. Okay. So that's what's concerning here for us right there. We looked at their debt to equity ratio. It's at 1.54. You want this to be lower than 1, a lot lower. Current ratio, you want this to be higher than 1. And it was about half of that, came down to a quarter. Now it's basically 0.15, which is, what is that, 1/15th, 1/10 of where it should be. So that's the concern there for us with it. See here, what else can we look at? The numbers that we do have here. The numbers are kind of high right now because they are still building out and growing, so that's reasonable there. But based on all of this, if they can restructure the debt, not have until next year to possibly pay for some of it in April, I think that's going to help them out. And if Bitcoin continues to go up, that's going to help them out even more. But they do have to get stuff installed. They are supposed to get to 5 point something exahash. They are at 1.4. They still have really good growth for them. They're supposed to get to that, they're saying 5 point something exahash by the end of Q2, I think is what they're planning here. So that would be really good growth for them, which would help them out tremendously on that. So with all that being said, like I said, I think they are being a little bit beaten down too much based on what's happening in the markets. We've seen Core go into Chapter 11 bankruptcy. We've seen others having to sell their facilities, miners, things like that. With them having to dilute shares, yeah, it does suck. But, I think the management there has a pretty good understanding of what's going on. And they bought shares in the company. So I think that is very telling as far as that they do believe that they can turn this ship around basically and go in the right direction. So let me know what you guys think of Terawulf. Terawulf is definitely one that I'm watching here. They do have some nice setups going for them. It's just, they've been beaten down. So let me know if you guys think they're beaten down or rightfully so or not rightfully so. and then we'll see what happens later on this week. If Terwulf reports tomorrow, we'll go over their numbers, compare them to see how they're looking, see how close I came to their numbers as well for what I have for them, and we'll call it a day. Otherwise, we'll just kind of see what happens. Thank you so much for watching. I hope you guys have a wonderful evening, and I'll see you guys in the next one. Until then, bye.